Well, welcome to Donald Trump's stock market post-tariffs, post-Liberation Day, unclear if it should actually be named Liquidation Day. Recession odds have now shot up over 50%. The Russell 2000, which we were told was going to go to all-time highs, has actually now hit bear market territory. The NASDAQ was just down as much as 5.8%, though it's bounced. It's only down 4.5%, which is still quite a bit. Inflation expectations across the board are rising substantially at JP Morgan, Goldman Sachs, Barclays, all with estimates now around 3.5% to 4% for producer and consumer price inflation, leading to a combined PCE report that is too high for the Federal Reserve to cut. This, though, doesn't seem to matter to markets trying to price in Federal Reserve emergency rate cuts by the end of the year. Many people on social media starting to beg that the Federal Reserve please bail out markets soon because they can't handle the volatility anymore. Some people are rumoring, I wouldn't know, but some people are rumoring that Donald Trump is now trending on Pornhub for simultaneously, well, you know what? And gold is actually falling in response to some of the drama that we're facing now as bonds are rallying, which, in case you're wondering what that's a signal of, it's a sign of markets pricing in a recession. Gold tends to perform well in inflationary environments, but if markets start looking past the inflation of tariffs and start pricing in recession, usually bonds outperform gold. At the same time as all of this, Congress has already had the Senate try to vote to repeal tariffs on China. However, those aren't really going to go anywhere without the House of Representatives, or frankly, they would just be subject to a Trump veto anyway. Senators Grassley and Cantwell are planning to introduce legislation that would require Congress approve all tariffs within 60 days, which is kind of honestly like a war powers move. You know, we have the War Powers Act that enables a president to go to war for up to 60 days without congressional approval. This is somewhat a similar move that folks in Congress suggest we should have, that Congress should essentially be forced to approve tariffs, much like Congress approves war. People call not having this rule in place taxation without representation, though in fairness, the counter-argument to this is Donald Trump was pretty clear that we might end up getting 60% tariffs on China, and people still voted for him in a landslide. Now he's actually doing what he said he was going to do. The problem is nobody actually believed he was going to do what he said he was going to do. Well, Stephen Mnuchin suggests that Donald Trump doesn't really care about the stock market. He didn't care about the stock market during version 1. Steve Mnuchin was interviewed this morning and suggested we saw in Q1, hey, as soon as we announce these tariffs, we expect the market's going to fall. And Trump's response was, no problem, bring it on. Well, sure enough, that's what we got here was a market fall. Donald Trump does not seem to care about the market. Bassett says this is a Mag 7 problem, not a tariff problem. And Lutnick says, we're negotiating with other countries and we'll be in talks, but right now we're not planning on scaling back any tariffs. Well, at the same time, Carolyn Leavitt, White House press secretary, says Trump is not negotiating, that these are the taxes that we want, which is really interesting because now you have a discoordinated response from the White House, which people wondered, was that even possible to get discoordination between even Leavitt and Lutnick? Usually both of them just parrot exactly what Donald Trump says or wants. J.D. Vance suggests, we're not going to fix things overnight, so, oh well, let it burn. And the problem with the big tariff announcement here is that we're missing the critical elements that would otherwise actually be able to re-enable manufacturing in America, such as an actual industrial policy, education, like trade education. Golly, if only there was a governor who ran for trade education, literally future schools in 2021, if only. And time. The imposition of these tariffs within the span of a week now, some on April 5th, some today, and some on April 9th, are all quite problematic. So the markets are obviously freaking out in response to this. In fact, and this is not meant to be a pitch, but we're seeing a skyrocketing inflow of people signing up for investing in House Hack and sending money because they're looking at this going, you know what? We don't see the prospect of new highs. We want diversification. We'd rather, knock on wood, hope for really big upside, 5, 10x, who knows, whatever we can pull off at House Hack over the long term. In the meantime, we want our 5% yield until conversion, and we want downside protection. And that's what you get over at HouseHack. Read all the PPMs and disclosures at househack.com, but we're doing a non-accredited fundraise, and we're seeing a jump. Anytime these crazy policies happen, we see a jump in fundraising over at HouseHack. And to me, it is a clear indicator that people are trying to get away from some of the madness in the equity markets. In fact, in honor of the madness in the equity markets, I have changed all of the red candlesticks to orange in honor of Donald Trump. So this way, when I see the NASDAQ reject 460 and fall all the way down to 454, or I see Tesla bouncing on the 260 level, I could see the fall in orange and the rise in green. You'll note today that some of my favorites over the last 6 months are actually doing quite well today relative to the rest of the market. The bond market is doing just fine, green at the top of the screen here. Rocket Mortgage is doing quite well, green at the top of the screen. And McDonald's. People made fun of me 6 months ago for investing in McDonald's, except McDonald's is up over the last 6 months, whereas a lot of other stocks are down. This is because McDonald's is a type of a recessionary play. Walmart used to have that status, but doesn't have that status anymore because it's become such an e-com giant, whereas McDonald's actually is seen as a recessionary play. So when you see gold down, bonds up, and McDonald's up, they are styles of recessionary plays. Mind you, this disaster that we're facing right now is one of the reasons that I'm like, it makes no sense to be in the ETF space going into a recession, because it's going to be hell, and there's little you could do with the regulations around ETFs, unless you just go pure inverse. But you'd have to basically redesign prospectuses that are designed to otherwise be long Train America, when Train America is all of a sudden getting destroyed. Now, that doesn't mean there aren't buy the dip opportunities out there. 41% decline on Restoration Hardware. I had a price target of under $200 for them. They're well under $200 now, which is great because I've been looking for an opportunity to buy them. Now they're like $140, and it's like, wow. I think we may have priced in tariffs for Restoration Hardware. But TBD. I don't have a single stock of exposure to them or share of exposure to them yet. What I'm more concerned about is trying to evaluate. I'm actually thinking about planning a trip to China, because ironically, China is doing everything we should be doing. I cannot believe the Communist Party of China, the CCP, is literally going on the news from the United Kingdom. And what are they saying? Protectionism doesn't work. It's not a solution. Trade with China. Free trade with China. They're in the United Kingdom right now, sucking the nippies of our trading allies, building trading relationships with everybody else that's supposed to be on Team America. Japan, South Korea, the United Kingdom, Europe. Guess what Canada's saying? Canada's like, fine, screw you, US. We'll go trade with the EU. And the EU's like, no problem. We will just coordinate in not investing in the United States anymore. No problem. Now, of course, a lot of people who are sort of parroting the narrative of Donald Trump are arguing that, hey, but all these other countries have tariffs on us. And nobody actually looks at the real numbers, because that's not fun. So what I see going viral on Twitter or X, whatever you want to call it, for example, is, well, Europe has a 10% tariff on our cars. Okay, well, Donald Trump just announced an additional 20% in tariffs against the entire European Union. Understand for a moment that the entire European Union's trade with the United States was worth $828 billion in 23. That is almost $1 trillion of trade in 2023. How much of that nearly $1 trillion was cars? About 5%. So because of a 10% tariff on cars, which affect about $44 billion of European cars imported to America, because of that 10% tariff that affects 5% of trade with the entire European Union, we're going to tariff the European Union 20%. The entire block, the entire nearly $1 trillion of trade, we're going to tax at 20%. Which hopefully it's just a negotiation, but the European Union was already open to removing the 10% tariff. And folks are like, all right, well, let's just negotiate that away. Hopefully all of this Trump stuff is just a negotiation, but wow, it is creating substantial not only resentment amongst our trading allies, but it is giving everything China wants to China. China is stimulating their economy. They're paying for your used cell phones or your used computers. They're giving you money for down payment assistance. They're helping businesses. They're bailing out the real estate market. They are cutting rates. They are printing money in China. China is where the money is being printed. That's where the money printer is right now. The money printer was shipped to China because of the tariffs. It's gone. It's not in America. It's in China. And China is using that money printer to attract all of our allies. At the same time, Vladimir Putin smells blood in the water. So guess what he's doing today? You know, I'm going to need more concessions on Ukraine. He's beating up on Trump when Trump is down. As in, at least, the U.S. economy feels like it's down because we might be trending into a recession. Recession odds skyrocketing now after these Trump tariffs. Trump tariff V1 was worth about 1.8% of gross domestic product. Trump tariffs version 2 are worth 10.7%. This is insane. These are insane levels of tariffs. Now, this morning in the course member live stream, we were talking about like, all right, you know, when is the buy the dip opportunity? And the reality is there is this belief that maybe we are at peak tariff. Like, how could it really get worse than this? I mean, technically we haven't gotten chip, critical minerals, or pharma tariffs yet. Those are still to come. And the retaliation of Trump against whatever other retaliation that we get, which has already been promised by the European Union and Canada and others, and China as well, we don't know what that is yet. We don't know how to price that in yet. So it's unclear, is this a buy the dip moment, or is this truly a recessionary shock? The question that we've been worried about, for example, yesterday morning is, look, layoff numbers haven't been that bad. This morning's Challenger report, outside of Doge layoffs, were actually benign in March. This is good news. This builds on the good news we were talking about yesterday, that the economy has its cracks, there's fuel spilled on the ground, but unless some dummy comes along and lights a match, we ain't gonna blow up. Well, right now it feels like a match is being lit. Look at the Challenger job cuts report this morning. What do we find? Benign layoffs in March outside of Doge. However, hiring plans due to uncertainty are at the lowest level since 2012, which isn't great. S&P Global Services, PMIs this morning were actually pretty decent. We got a recovery from February, possibly though because of warmer weather, and we had colder, gloomier weather in January, February. Future activity wasn't as great. ISM services missed on all levels, but when you looked at the commentary, it was really just employment that drove into contraction, and a lot of that, again, because of tariff uncertainty. It actually wasn't a horrible report, despite missing on some of the ISM services numbers. And the services numbers are some of the data sets that we really don't want to see roll over yet. We've already seen manufacturing start to roll over after the pull forward, but services now as well, not ideal. So now the question is, where do we go from here and where's the bottom? Well, ideally, the bottom comes in coordination with Donald Trump suggesting that we're going to come up with some form of deals and we're going to scale back some of these tariffs. Because the reality is some of the tariffs that we're seeing now are insane. Look at this. Here is a chart showing you where we have free trade. That's the green, this dark green. We have lower than US tariffs. So China actually has fewer tariffs on us than we have on them. And then the blue areas are areas where our tariffs are about 2 to 5%, their tariffs are about 2 to 5% higher than ours. So in fairness, Europe right here exceeds by less than 2%, but Russia and some other areas 2 to 5%. So you've got a range here where some countries have tariffs 5 to 10% higher than ours, maybe a little bit more than that, maybe a little less than that, but the response that we now have of this blanket 10% tariff on all of our trading partners, even where trade is sitting at just 2%, or tariffs are sitting at just 2%, and now all of a sudden we're taxing them 10 to 20 to 30%, is quite frankly insane. And it's one hell of a negotiation if you're looking for chaos. But remember for a moment that we are becoming more and more reliant on trade over time. You could look at this chart right here. We are more reliant on imports as a portion of our GDP. But what's worth noting, what most people who are parroting the sort of Trump narrative that this is somehow good for the United States are missing, is that when you actually look at what tariff rates were, trade weighted across the country, sure, you could cherry pick little quota-based things like triple digits on milk, which not a single triple-digit tariff was ever paid on milk sent to Canada. What you have over here is you actually see tariff rates are pretty low. 1.3, 1.4, 1.6, 2.2% from China. These are not levels that are in tune with the response that we are providing. So this is why folks are now increasing their odds of a recession. And it sucks because the people who are going to suffer are the Americans. Stellantis just announced plans to lay off 900 people effective immediately because of the tariffs going into effect. That's 900 more American workers laid off. And that's just the beginning. We expect substantially more of these sort of layoffs, which isn't great. Lutnick apparently is now on CNBC he's not on CNBC, he's on CNN, saying that there is no chance Trump will back off of tariffs. All right, well, that makes it a little bit harder to really encourage upside. Now, I'd like to be Train America. I don't want to feel like I need to start studying China or going to China to find a place to invest. I mean, personally, I'll just invest in real estate because I think what's going to happen here is what we're going to find is if we do go into a recession, bond yields are going to plummet. The Federal Reserve will be forced to emergency cut, but only when jobs roll over. And then we'll be right back to 0% interest rates and money printing in the future. Now, the problem, though, is people are begging for the Federal Reserve to cut today. Here's this guy, Tom something. The FOMC needs to convene an emergency meeting and do a half-point rate cut today, leaving a big spread, blah, blah, blah. No, they don't, and they won't. Look, I study the Fed a lot. I see this as extremely unlikely. Is it possible? Sure. I see it as extremely unlikely. Why? Because the Federal Reserve is not going to preemptively cut rates when the job market still isn't showing major stress. The problem is, once the job market does show major stress in the face of higher inflation, what happens? It's too late. The Fed will end up cutting too late. They will have emergency cuts. We will probably go to zero in the next recession, and we might even see negative rates in the next recession. The problem is it's going to be too late. Now, I know people are like, oh, but Donald Trump wants lower rates. Congratulations. Do you want to really put America through a Trump-induced recession? Do you really want to see another 15 million people unemployed? Do you really want to go through the risks that come with a recession where now all of a sudden it's harder to get new jobs because AI prevents jobs? The Federal Reserve is less capable of bailing us out because of inflation levels, although we'll have deflation in a recession, so that'll turn. It'll just be late. And our fiscal environment, our White House and our Congress, is going to be less likely to want to stimulate because of the budget deficit. Now, unless, of course, they're like, screw the budget deficit, we need to stimulate. Hey, then we can get our Doge dividend checks. But we'll just be going deeper into debt, and we'll actually be accomplishing the exact opposite of what Donald Trump has set out to accomplish. Now, it's worth noting that the Federal Reserve, market pricing, at least, in terms of what the Federal Reserve going to do, now shows 3.6 cuts priced in through December, with the first cut in June now essentially fully priced in at 97%. The problem is, I don't think the Fed can cut until you actually see jobs roll over. And this is really problematic because, again, once the jobs roll over, it's too late. You're in the deep duty recession. It's bad. This is very bad. So, this idea of, do we want manufacturing back in the United States? Sure, but how are we going to do that? We'd have to educate and we'd have to stimulate or incentivize to make that happen. So far, policy that we're seeing is doing none of this, and this is what's problematic. This is what's leading. I mean, honestly, a negative 2% day on the Nasdaq is severe. We're at negative 4.4% right now. Tesla down 5.6%, Apple down 8.5%, Restoration Hardware 40%, Nvidia down 6% as Microsoft is canceling even more data centers. This is quite an odd environment, and it's very, very difficult to argue that a bottom is here today. Is there an opportunity to buy the dip? Absolutely. There's always going to be an opportunity to buy the dip. Is there an opportunity to diversify and say, you know what, hey, stocks have done really well for a while. Yeah, now we've got a bit of a correction going on. Is this an opportunity to diversify and still get September of 2024 pricing? Absolutely. And again, that's why I think people are flooding into what we're doing at House Hack, because not only do we see ourselves as massive beneficiaries of lower interest rates coming, which is great for the real estate market, but and great for the company and great for what we're doing. But we're giving you a way to diversify. You get 100% of the upside in the stock. So if we 2x, 5x, 20x, 10x, whatever it is, you get 100% of the upside in the stock value. You get 5% paid to you on a monthly basis, 5% annual, paid to you monthly. You get that until conversion, and we deal with all the real estate. we're going to be going shopping, and we've got zero bank debt. So you can look at all of our assets. If you want to look at the properties that we have or whatever, you can see our financials and our assets. Our cash balance is actually a lot higher now because of the fundraiser we've already done. So we can update that. But our company is backed by real estate assets that have no bank debt on them. So when rates go to zero, we're going to get to milk bank debt, and we get probably 3 to 4x the assets that we have at this company just by opening the door to bank debt in the future, which is remarkable. And so we think there's a huge opportunity right now in house hack, and we think we're so well positioned because we're so cash heavy, and we're so ready to go buy the dip in markets that are just getting reamed right now, like in Phoenix or in Florida or in Texas or whatever. We're unexposed to some of that craziness because we bought in very, very low inventory markets. Again, you can see a lot of those on the website at househack.com. But anyway, that's now open to non-accredited investors and accredited investors. So now what we've got is, we've got, what do we have here? Carney says, let's see here, Canadian tariffs will not affect auto parts and content from Mexico. Oh, here we go. Canada just responded. Canada responds, Canada will impose 25% tariffs on all vehicles imported from the U.S. that are not compliant with the USMCA trade deal. Canada will develop a framework for auto producers to avoid our counter tariffs as long as they maintain their production investment in Canada. Canada is now demanding that production be held or completed in Canada instead of the United States, which, mind you, is exactly what Europe is doing. Emmanuel Macron, for example, of France, is really parroting what you're hearing the European Union suggest, which is this idea that we should stop investing collectively in the United States. It's too risky, it's too uncertain, and that all instruments are on the table, including the EU's most powerful anti-coercion tools, which are not great because they could really threaten intellectual property rights for some of our largest companies in America. Foreign direct investment becomes harder. Access to public funds becomes more difficult. All of these are big problems, and I mean, all of them are frustrated. Macron calls this pathetic. Schultz of Germany calls this just wrong. At the same time, Scheinbaum is like, can we be the favorite? Can y'all come invest in Mexico? Which I do think there'll be a future where we go back to free trade and we actually go back to utilizing our manufacturing opportunities locally in Mexico and otherwise. But I don't know how close that future is. Right now, this video is really a consolidation of everything that we've heard over, frankly, the last 24 hours here. And it has been a lot. And so while I do expect there will be buy the dipping, I'm very curious to see how institutions are going to react over the next days. What kind of outflows are we going to see from exchange traded funds? What kind of diversification are we going to see from the market? Are hedge funds going to continue to be sellers like they have been? They've been the largest sellers in the last 12 years, which if you think about it, goes right back to essentially the double dip recession of like 2012-13 EU bond crisis. Not as bad yet as 2008, but boy, oh boy, a lot of folks comparing us right now to 2001 and more of a dot-com bubble, and that this tariff announcement is just sort of lighting that match. So very, very interesting. Very, 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 very interesting. So Michael Fields donated $20 to say, but Kevin, you're not America first. Dude, I'm so train America. I could not be more train America. I'm just anti-stupidity. I'm anti-ruining the relations that we have with all of our trading partners. You think you have the biggest wiener, but when everybody puts their wieners together and fights the U.S. is overplaying its hand. You could suck on the nipple all you want and think that that's happening here, the coordination between our trading allies and China, who calls us the enemy. If you think that's good, you've lost your marbles. You're drinking too much Kool-Aid. And I come to this channel to bring what I believe are facts and valid perspective on both sides. I purposefully don't come into here with a political tilt. I don't care. To me, there's like, my focus is house hack. My focus is, hey, if rates come down, we're going to do great. If rates don't come down, we'll keep doing wedge deals. We've got some incredible announcements. That's what my focus is. That's my priority. It doesn't really matter how orange or green the stock market is to me because I've already hedged and protected myself. So it doesn't matter which way it goes. It really doesn't make a difference to me. But to drink the Kool-Aid and not realize the international damage you are causing is your own blindness. And it is dangerous. You've had too much of the Kool-Aid. Very sad. This idea, like I'm hearing people, all of a sudden, people are turning anti-free trade. You know, like this is the stupidest thing ever. How could you be anti-capitalism? That's what Train America is. Train America is about free trade. Now, I understand we haven't had 100% free trade. We had 98% free trade with Israel. Okay, we got rid of the last 2%. We have roughly 98% free trade with Europe. Yeah, trade-weighted tariffs are about 2%. All right, let's have a negotiation about the remaining 2%. Maybe this is Donald Trump's way of trying to get rid of the last 2%. The problem is you're pissing everybody off. And then for you to be a jackass and suggest that I'm all of a sudden anti-American means you should probably go get checked out and check the screws in your brain because something's loose. I'm responding to what I think is stupid because I'm seeing our trading partners go to a country that calls us the enemy. And so for you to sort of and be blind to that is your fault. That's your problem. So, you know, I don't know. This is wild to me. Somebody says, what is free trade? This is obvious. Tariff-free. There should be no tariffs. Guess what China's doing? This is what I'm saying. I think people are blind to this. Do you realize what China is doing? Hey, while the U.S. tariffs, if anybody wants free trade, come to China because we're going to have free trade agreements with you. If you come to us, 0 tariffs. Look it up. China is promising, while they're stimulating, 0 tariffs if you offer them free trade. They are basically taking their clothes off and spreading their legs going, come over. We're available. We're available for free trade. No cost at all. And they are using the capitalist, like they're the ones who used to be protectionist. And they're like, protectionism doesn't work. They are taking the free trade capitalism argument. That's what I'm saying is I don't understand how the Communist Party of China believes in free trade more than we do. This is dumb. This is so dumb. Anyway. I'm sorry. It's just dumb. So that's my take. Hopefully you can take all this information as you'd like. The point is, we're still going to focus on growing House Hack, and we appreciate all the people flowing into House Hack. We've got international non-accredited investors all across the world that are investing. Switzerland, Sweden, Israel, Germany, Singapore, Italy, Spain, Netherlands, Canada, you name it. We've got many investors. I mean, we have, I think, over 2,000 investors in House Hack. It's remarkable. All across the world. Even in our latest fundraise, some of these countries are increasing their investments in House Hack, really to diversify away from the orange stock market. It's insane. So like Brandon Denny here is, Trump derangement is hard to come over. This is stupid derangement. I am deranged when people do stupid things. That's what I'm responding to. Like this illogical argument of, oh, the TDS is real here. Have you no economic brain? Have you missed Economics 101? Are you blind to what is internationally happening? I don't get it. Again, go drink more Kool-Aid. Again, I come to this channel not to go far left or far right. I'm not here to be a Ben Shapiro or a Charlie Kirk. I'm not here to be a Pac-Man who's only on the left or, you know, a centaur, whatever. I'm here to be a centrist, an economist, to look at the Federal Reserve to help guide you. The Federal Reserve can't cut until jobs roll over. When jobs roll over, it's too late. That's really important to remember. And so then you have to evaluate, how are you going to protect yourself? What are you going to do if you're laid off? Go back and drink some more Kool-Aid? What's that going to do for you? You're not going to get a job. And then you'll be like, damn, Kevin was right. I should have had some TDS myself because this is bullshit. We're supposed to make America great again. We made America shit. This is dumb. So this needs to U-turn fast. And honestly, even if we start U-turning now, some of this damage is already done. We are coordinating our enemies against us. The longer this goes on, the worse it is. If we can undo all the tariffs right now and then pass tax policy, maybe there's a chance we could get out of this without a deep, dark, dirty, long recession. This will not be a short recession. I am optimistic. There are reasons to be optimistic. We talked about reasons to be optimistic yesterday. Yeah, I'm not fully one-sided here. There are reasons to be optimistic. The stabilization in jolts, the stabilization in quits, the stabilization in unemployment claims, although continuing claims just hit a record, going back to 2020. Somewhat of a stabilization still. We haven't seen rampant layoffs, low warn notices, low layoff notices. If that rolls over, we're done. Then the Fed will cut rapidly. But until then, whew. Oh, thanks, Brandon. Brandon's clarifying. He's talking about Trump supporters. Thank you. I appreciate you. And again, I'm not here to be anti-Trump supporters. I'm not anti-Republican. I'm not anti-Democrat. I'm anti-politician because I'm tired of politics. Politics is bullshit. I am so pro-train America that I would not be doing my duty by not complaining about this and helping educate how terrible this is. That's my duty, and that's what I'm trying to provide. I don't care if people are like, unsub, just like, okay, then I guess you don't want to hear valid perspective backed by data and research. Fine. Then go back to Twitter and retweet everything Charlie Kirk is telling you because, obviously you're not looking for a balanced take. Yeah. All right. So somebody here says there's risk in the market. Well, you have to remember that, of course, there's risk in the market, but you have to think about how much risk. If we go into a 2 or 3 year recession, we could have a lost decade of investing. People could stop investing just like they did in 2003 to 2008, or longer, 2003 to 2013. That's a decade of lost investing where people just stopped being investors until we went back to buy everything, bail everything out and buy the dip on everything, which made sense because we were printing money like crazy. The opposite situation right now. It's scary. It's scary. Max here says, $5 from Canada. No way Trump will U-turn. He needs to save face. There needs to be an offset. And hopefully there will be. Knock on wood. Hopefully there will be. Anyway, thanks so much for being here. I gotta go. Good luck out there. I hope you don't have too much more orange in the stock market today. It does feel like we have some stabilization at negative 4.4% on the NASDAQ, negative 8% on Apple. But watch the market close. I think the market close is going to be somewhat of a tell in terms of how institutions are selling. Shout out to those of you investing in HouseHack. And if you have questions about investing in HouseHack, email us at ir@househack.com. And if you're interested in joining me in the market open live streams, trade alerts, trade perspectives, trend alerts, the courses, everything, we have a very inexpensive Meet Kevin membership. You could be part of the group. We're scheduling our August marathon soon. So course member meetups, many of them coming this year. We've got the course member marathon happening. And then if you want to be part of those live streams every day, we even had an emergency liquidation day live stream for this Trump event yesterday at 4 p.m. Obviously, many of the course members, we've already been prepared for this, so nobody's actually getting liquidated. But we had an emergency hour-long live stream yesterday after this announcement. If you want to be part of those, come join in the Meet Kevin membership. Try it for 30 days. If you don't like it, cancel. No questions asked. So give it a shot. Go to meetkevin.com. Thanks for being here, folks. We'll see you in the next one. Goodbye. Good luck.